So we all know Doge and other cryptocurrencies have been going through some hard times. However, there has been some strange market activity recently. It appears that large holders of Dogecoin, referred to as whales, have been increasing their activity across the market at this time. It's not clear what they're doing, but this could have market-moving implications later on. According to MarketWatch, the cryptocurrency market has been very turbulent in recent weeks as several cryptocurrencies have attracted more interest from businesses, investors, and social media. At the same time, it's resulted in massive price increases and enormous price drops. According to Forbes, the major cryptocurrencies out there, Bitcoin, Ethereum, and even Dogecoin, have all plummeted in recent days because of, well, Bitcoin. Bitcoin investors are considering dumping their holdings, causing the price of other cryptocurrencies to plummet, and this has dragged the sentiment of the broader market as well as that of Doge. During such turbulent periods, it's interesting to see what Dogecoin whales are up to. The rise witnessed on the Dogecoin blockchain looks to be slowing down after a burst of activity that saw Dogecoin handle a bigger dollar worth of daily transactions for a brief period than Bitcoin and Ether combined. There are several theories. Either the Dogecoin whales were liquidating some of their positions or they were moving them into wallets that will be used to trade later on. Either way, this is an important development that could have an impact on the price of Doge. Throughout 2021, Dogecoin's price surge has been followed by an equally absurd growth in the value of transactions on its network. On May 5th, the dollar amount of Doge transmitted from wallet to wallet reached $82 billion, surpassing the $35 billion recorded on Bitcoin and the $12 billion recorded on Ethereum. So what are Doge whales up to? Are they waiting for the next price surge to liquidate their holdings, or are they preempting the market and selling off? The recent Bitcoin-driven drop in the value of the currency might have been accompanied by huge sell-offs. But stick with us and find out more. Before we go any further, don't forget to leave a like on this video, tap the subscribe button, and turn on post notifications as this helps you stay up to date with what's going on with Dogecoin and with developments in the broader crypto market. Also, now you can join our channel as a paid subscriber for some exclusive benefits, and don't forget to join the free Discord group via the link in the description. So who are whales and why does this matter? Individuals who own enormous quantities of a particular cryptocurrency are known as whales. This gives them the power to influence the value of the cryptocurrency in question, resulting in price volatility. Now, a Dogecoin whale account, which has roughly $12 billion in the currency, has resurfaced in the news. Despite the recent dip in value, the assets in this whale account are still intact. According to BitInfo charts, the Dogecoin whale first purchased Dogecoin on February 6, 2019, when the cryptocurrency's value was approximately 0.18 cents per coin. This same account, however, now possesses 3,671 crore coins, or around 28% of Dogecoin's entire supply. This whale account held $22 billion in Dogecoins before the cryptocurrency crash 2 weeks ago. Musk had previously described this as too much concentration, and said the underlying issue for Dogecoin is that it's controlled by a small number of account holders. Tesla CEO has stated that such whale accounts will have his whole support if the majority of their coins are sold. Musk went even further, promising payment in actual currency if whale accounts reduce their holdings. While it's impossible to know who this Dogecoin whale is until the individual decides to come forward, rumors abound that it's none other than Musk himself. So back to what's going on with whales and Dogecoin. Outperforming the world's two most well-known blockchains is all the more remarkable since Dogecoin's daily totals were as low as $10 million just as recently as December 2020. Tesla CEO Elon Musk and the concentrated efforts of social media traders focused on boosting Dogecoin in a way akin to the shares of GameStop. While overall activity on Dogecoin is still considerably above December lows, a significant reversal was seen in May, suggesting that whales are growing tired of Dogecoin. On Wednesday, Dogecoin handled just under $5 billion in daily transactions, down 93% from its all-time high of $82 billion earlier in the month. Meanwhile, the average transaction value of Doge plummeted from $1.16 million on Sunday to around $240,000 3 days later on Wednesday, a reduction of about 80%. Despite entering through a far lower sample size, the coin's huge average transaction value has maintained for most of the last month, indicating that Dogecoin was largely used by wealthy account holders. Although the rise in activity on the Dogecoin blockchain happened in spurts throughout the year, the two indicators we mentioned saw a significant increase in mid-April as traders attempted to artificially push the value of Dogecoin in the run-up to 420. The ensuing decline in network activity was matched by a 63% reduction in the Dogecoin price. which plummeted from its previous all-time high of 73 cents through the most of May. So what happened? Following a record day of activity moving Doge assets, it seems whales took a breather as the value of the cryptocurrency plummeted. This happened on Friday, May 28th, and since then, it would appear that activity has slowed quickly. There are some pretty interesting charts on BitInfo charts that could be instructive. To be clear, the Bitcoin market is much more active because it has a greater number of investors who own significantly larger amounts to $500. As such, people are always buying based on changes in the broader market. This explains why the volume of transactions tends to be higher than Doge, except recently where the anomaly emerged. Dogecoin's average transaction value dropped over 80% from a peak of $1.16 million on Sunday to around $240,000 3 days later, according to BitInfo chart statistics. The fact that the average transaction value was so high indicated that whales had taken over a significant portion of the network's activity. I'd better reiterate that they might be simply moving their assets into other wallets or are simply selling some of their assets in order to reduce their overall holdings. I wouldn't be surprised if the recent downturn to just under 30 cents per Dogecoin spooked some large holders. Furthermore, according to BitInfo charts, the value of Dogecoin transmitted via on-chain transactions peaked at $82 billion on May 5th, well above the $35 billion of Bitcoin and the $12 billion of Ethereum. When compared to the overall daily transaction values of $10 million recorded in December, this represents an almost 3,500% increase. Nonetheless, the situation appears to be gradually returning to normal. Dogecoin handled less than $5 billion in daily transactions on Wednesday, down 93% from its all-time high. Dogecoin surprised everyone when it witnessed double-digit growth many times in April, ranging from 20% to 86%, and achieving a market valuation higher than blue-chip firms like Ford Motor and Kraft Heinz. What are the whales up to, though? In order to find out what's going on in the broader cryptocurrency market, we began disaggregating some of the movement across wallets. The majority of these whale accounts were moving Doge into other wallets. It's impossible to say if some of these whales are playing the role of market makers and therefore reducing their holdings to increase trust in Doge. Remember that after Elon's comments, some people were worried about a few investors having so much control over the value of the asset. Let's note that these whales own between 6 and 45 million. The changes in these portfolios equally came at a time when the price of Dogecoin was down following a broader decline in the cryptocurrency market, driven by Bitcoin. It is plausible that some whales might have reduced their Doge holdings at this time to stabilize the price of the cryptocurrency, or others might be moving these to other wallets that will enable them to trade seamlessly. There are several reasons why these moves are happening just now. On the one hand, it might be to stave off a more protracted decline in the value of their assets, but it's unlikely that whales will liquidate their positions when the price of Doge is trading so low. According to data from CoinMarketCap, one Doge is currently trading at 29 cents, so it may be unwise to liquidate their assets just yet. However, it's more likely that they're parking their assets in wallets that will enable them to trade without calling too much market attention. If this is the case, then the market will appear more decentralized, and high-profile investors like Elon Musk can finally give their backing to Doge. For new investors, it will mean Doge will likely trade like the other cryptocurrencies, with no one person having a market-moving effect on the value of the currency. If at all whales liquidated their position, this will cause more and more people to invest in Dogecoin. More importantly, the currency could get full backing and official endorsement from Elon Musk, which will be good for its share price over the long run. The price of the currency will not only perform better, but it might be taken even more seriously by investors across the marketplace. Thanks for watching this video. We hope you enjoyed it. Don't forget to like and hit the subscribe button to stay up to date with market developments. Also, consider joining our channel as a paid subscriber for some exclusive benefits. Check the join button next to the subscribe button. And don't forget to join the free Discord group via the link in the description. Good luck and happy investing.
Hollywood perfect. That's how it goes. Hollywood perfect.